Good morning, folks. Welcome to the next lecture on this YouTube channel. Hope you're all doing well. So today's topic would be on fair value gap, FVG. So exactly what is fair value gap? In price action, we often see a strong candle up or a strong down candle. Up candle means these are the up close candles. Why I'm saying up? Because price opened here and then closed here. So this is a up close candle. In bearish candles or down close candles, price will open here. Look at this pointer. Okay, I'll show it in the pointer. Price opened up here. It made a high, made a low, and then closed here. So price closed down from the opening. And in bullish candles, the open is here. Price closed above from the opening. So these are called up close candles, and this is called the down close candles. I won't be naming them as bullish or bearish candles because I think this is a very layman language. So in algorithmic term, bullish candles are referred to as up close candles, whereas bearish candles are referred to as down close candles. Okay. So in price action, we often see a strong moving up close candle or a strong moving down close candles. Like we say, those candles are very big enough to move. Okay, just a second. Yeah. So these candles, when they move, it indicates that there is a lot of buying or selling that occurred in that candle or at that time. Okay, this can be uh, means this can be validated by looking at the volume that came. Look at this candle's volume at the top corner, top this volume section. So this candle volume was 52.95K, whereas this candle's volume, the small down close candle, is just 19.3 and this is 16.7. Again, look at this candle, it's 196.2. This is, there is some less volume out here, but then you get the point. So what algorithm does here is that it creates a gap between the consecutive candles. Okay, so this area of or the gap is called an area of imbalance, where there is an imbalance in the price movement. We can also call this area as an inefficient area, where price is inefficient in its movement. Or simply put, we can call this area as an area of fair value gap. So this gap can be called as imbalance, it can be called as inefficiency, or it can be simply called as a fair value gap. Okay, so what happens here is that most often price will return to this gap and then again continue moving in the direction it was previously on. So let's understand how a proper fair value gap is formed. So for a fair value gap, we will always need three candles. Okay, for a bullish fair value gap, we have this candle. This is the first candle. This will be our first candle. I'll just mark it out here. This will be our first candle. Fine. This would be our second candle. Okay. And this is our third candle. Fine. So for a bullish fair value gap, we need three candles. And the third candle's low, as you know from the candle formation theory, this is the low of the candle. The third candle's low should not touch the first candle's high. That's as simple as that. So what happens here is that when there is no contact of the first candle's high and the third candle's low, we create a gap. So this gap is called as a fair value gap, correct? So why is it called a fair value gap? I'll come to it to this later. Why is it called a fair value gap? Why the term fair value gap? Okay. So similarly for a bearish fair value gap, I'll show you in a bearish trend. Okay. So similarly for a bearish fair value gap, what we can observe here is that I'm just removing this. Okay. I'll explain what are all this order block and everything. So you'll get to know about all these things. So similarly for a bearish fair value gap, the first candle's high, oh sorry, the first candle's low, this is the first candle's low, should not hit the third candle's high. The, so this will be a bearish fair value gap, right? So price will go down, come up here, hit the fair value gap, and then again continue downwards. Fine. So you can enter here at the low of the fair value gap, and then your stop loss can be at the this swing high. I guess you know what a swing high is. I have previously mentioned. It's okay. I'll just make a separate lecture uh, video on that. What is a proper swing high and a swing low? Okay. So similarly, these are bearish fair value gaps, and this is a bullish fair value gap. Okay. These fair value gaps can also be extended for price to again come and hit it. This is another bullish fair value gap. So some will say that it came down below the fair value gaps low, so your entry is wrong. Fair value gaps don't work. But you need to understand the context. I said that the low SL should be at the swing low. Okay, so that's it. What now you get to understand what a fair value gap is, how it is formed. Okay, so you can't say that this is a fair value gap, these three candles, because there is no gap between this candles, the third candle's low and the first candle's high. This can be again a bullish fair value gap. Okay, so you get the point, right? So we as traders, our main focus should be to identify these areas of inefficiencies and wait for price to retest or retrace into these areas and then look for any reversal patterns that are formed in these fair value gaps, and then we can trade accordingly. Okay, so I know this is a bit complicated, but trust me, at first when I studied ICT, I studied his lectures just for say 2 or 3 videos, and then I left it because I thought it was so complicated. But later on, I realized that this is the actual way of how the markets are moving. These concepts make us understand why price is doing what it is doing. Okay, so I urge you all to just give it some time. Don't think that you'll learn ICT in 5 minutes in those YouTube videos where it shows this learn ICT in 5 minutes. Nobody can teach you ICT in 5 minutes. Okay, I guarantee you that it will take time, but you won't regret the time that it took when you become profitable with this concept. Okay, so these are the concepts of fair value gap. Okay, why it is called a fair value gap, I said earlier, because what the term means is that fair value. Fair means it is a fair price where orders can be again filled and then market can go up. Say for example, there I said the volume was very high in this candle. So just imagine a number of buyers are entering at this time of day, that is 9:34. The 9:34 candle number of buyers are entering here. Okay. So what happens is when you punch in a lot of orders, all the orders does not get filled here. Okay. So that leaves an area of inefficiency because there was a huge amount of buyers here. Then price went up. There was a creation of inefficiency. Price came down to fill the pending orders or the orders which these buyers thought that since price had already moved up, we can punch in more buying orders at this area. So price came down, hit this area, and then again went up. Similarly, here is the case. There were a lot of buyers here. Price came down, went up, and again continuously came down and hit this fair value gap. And then finally it went up. So I'll just show you. Look at this. This simple move is around 100 points. So in Nifty, 100 points is a very good move to capture. One lot will earn you around 7,500 points. So that's a lot of money for a day trader, right? So that's it for today. Next up, I'll teach you about volume imbalances and how you can combine both of these concepts of fair value gap and volume imbalances and then take a trade. Remember, I told you you need at least three confluences to combine together to make your trade a better one. I'm not saying that it will give you a 100% win rate, but all I'm saying that the probability of your chance to become successful in that trade that you take increases if you combine these confluences together, as well as you need to align yourself with the higher time frame movement of the market. So I'll come to those higher time frames and everything later on. Now I'm just getting or letting you know about how the patterns look in the chart. Don't confuse yourself with like I'm just showing you the simple blank chart. There is no video or I'm not showing myself because you don't need to see me. You just need to see this chart. This chart, as much as you can see it, like engrave these patterns and everything in your mind. Like it should be having water with your meal. So it's not to be complicated. So that's it for today. See you in the next video. Until then, keep hustling and grinding, folks. Goodbye.